Hey, good morning, everybody. I'm Todd Adwar.
I'm Peter Goodman.
And welcome to
Real Essentials.
There we go. So, end of the summer.
It's been a good summer, actually.
Yeah, great summer. You know, I heard that this is going to be the first year in existence, or since they've been keeping record, that we're not going to have a 90-degree day in August in New York. Wow. So, that's pretty good. Wow. So, there may be no reason to move to Florida if we're going to have great weather like we've had all year.
Well, if you want heat, that's where you go, Florida.
Okay.
So.
All right. So today we're going to talk about closing costs. And the reason why we're doing that is over the last few closings that Pete and I have done, we've had clients and they've been so concerned about closing costs that we thought we should talk about them. So I'll talk about the loan officer closing costs, and Pete's going to talk about the escrows and insurance and so on and so forth.
Sounds good.
So most of the closing costs, folks, are really standard. You have title costs, you have points, you have application fees, you have bank fees, but most of the costs that you're going to look at are really standard. It has become standard now that people are paying points at a purchase to buy down their interest rate, and that was something that stopped. We didn't see that for like 20 years. Right. Every single person before that was 0 points. But don't fret. What the good news about that is that when you pay points on a purchase, you're getting all of that money back, or your percentage back, come April on your tax returns. So when you're buying down the rate, getting a cheaper payment, and by getting a cheaper payment, you're going to pay points. A point represents 1% of your loan amount. And when comparing rates and points from banks, you're looking at not only rates and points, you're looking at the APR, which tells you what the other fees are, like the bank fee or what have you. In any event, what have you seen from clients that have gotten their eyebrows raised?
Well, I've seen everything. But what you said, the word closing costs.
Right.
It's an important word, because what people don't realize is that when a bank, and you correct me if I'm wrong, when a bank says closing costs, they mean the costs associated with the actual closing. They don't mean prepaids and escrows.
Correct.
Right? And so what prepaids and escrows are, and people don't really understand that term because it's not something that is in everyday vernacular, right? Everyone doesn't talk about prepaids and escrows. But prepaids and escrows are, number one, taxes, which I'll talk about in a second, homeowners insurance, appraisals, things that you have to pay as part of your home, or your purchase of your home. They're not actually closing costs. Down payment. So you're buying a house for $100,000 and you're getting an $80,000 mortgage. $20,000 is your down payment, right?
Of course.
That is, of course, a classic, easy to understand prepaid. But what people don't understand is, number one, your homeowners insurance. Lenders require that you have paid your homeowner's insurance for 1 year in advance before you get to the closing table. So you pay for a year in advance, and then what's going to happen is your bank is going to escrow for your homeowner's insurance and your taxes. Remember, obviously,
and the simple way to say that, and in each month you make your payment, and that, let's just say we close today in August, what is it, the 29th? So we close August 29th. We want to have enough money in our escrow account so that August 29th of next year, the bank can pay our insurance again. So you paid in full at closing, and then each month you make a 1/12 payment so that we can pay it next year for you.
That's the easy way of saying it. As an attorney, I never say things the easy way. That's why I have Todd here to interpret for me. But understand a couple things about that. Now you bring up a really good point that people don't think about. When you close, let's just take August 15th as an easy example.
Right.
You close August 15th, you're going to pay your interest on your mortgage from August 15th until September 1st at the closing, which people may not realize. But because you will also have a holiday when you pay your first mortgage payment, because you never prepay interest. So what happens is, if you close August 15th, your first actual mortgage payment is not until October. You have a 15-day grace period. So you really don't have to make your first mortgage payment until October 15th.
Yeah, you have 60 days.
Right. That pays September's mortgage. You paid from August 15th till the end of the month at your closing, so you have a nice holiday, but you are paying more money at the closing the earlier in the month that you close.
Right.
That's one thing. The other thing is taxes. That's a really big one.
So that's the one where when you look at the good faith estimate from the banks, they're always wrong.
Oh.
So you need an experienced loan officer. So there are really 3 ways that taxes are paid in the country: every 3 months, every 6 months, and every 12 months.
Okay.
1 in a million counties have every 4 months, but those are the main things. So 3 months means at closing you're going to pay 5 months worth of taxes. 6 months means you can pay 8 months worth of taxes, and 12 months means you can pay 14 months. So a lot of times you'll see on a good faith estimate it'll say 4 months or 6 months, and you get to the closing and you got 14 months. Like, whoa, I wasn't expecting that.
And people need to understand that. Well, that's part of that. Is that what we just talked about when you make your closing payments? So if you have a tax October 1st, let's say, right, and that October 1st payment is a 6-month payment, let's say, and we just talked about August 15th closing. Well, your first mortgage payment's not until October 15th, and the bank is going to pay your taxes because your bank pays a pretty payment.
Right.
Principal, interest, taxes, and insurance. When you make your mortgage payment, your bank is taking 1/12 of your insurance and of your taxes, and they're paying your taxes and insurance when they become due. So if you close, think about it, you close on August 15th, you don't have to make a mortgage payment until October 15th. Well, what happens to the October 1st tax? It's going to be due for 6 months. You get to pay it at the closing. And that's one of those surprises. And that's why I always tell clients when I do my contracts, have at least $2,000 or $3,000 available just in case. I'd rather have too much than not enough.
You know, Pete, there's something going on now because the prices of homes have gone so high in the Northeast. There are so many homes being sold at $1 million or more.
Yep.
So what happens if I buy a house for $1 million?
At least in New York, you have a mansion tax. So you have 1%. Any residential home, the buyer pays 1%, and it escalates. So once you get over, they just changed the law. Once you get over $3 million, you actually have to pay a sliding scale additional. So that's a big number that you have to think about. So you have to be aware if you're buying residential property, even mixed-use properties, you may have to pay that mansion tax. Another thing I don't want to forget, it just entered what I was, one of the costs I was thinking about is oil. People, I don't know why this is. This happens almost every closing where the person has oil heat, the seller has oil heat. You go to the closing, you're all finished, everyone's shaking hands, and all of a sudden the seller says, "Oh, I forgot. Petro came and they measured, and there's 250 gallons left in my oil tank. Here's a bill for $1,000."
Right, it's $4 a gallon. You know, some of these people have 500. I had a 1,000-gallon tank on my house. Wow. You know, you come in and you're paying. I just filled it up. You're giving me $4,000 at closing. So
that's crazy. And you only have a 500 square foot house.
Yeah, small house. Well, it's cold sometimes.
but closing costs really, it's a catch-all. But you need to have experienced professionals that are guiding you. We talk about team a lot of times on these podcasts. Team is important. Having the right team, understanding what those costs are and where those pitfalls are is critically important to getting you to the closing table and having a good experience throughout the whole process.
So just New York, New Jersey, Connecticut, New York, guess 6% of the purchase price as a closing cost. New Jersey and Connecticut, about 5%. So if you just use that as a rule of thumb, it's not going to be accurate, but it'll get you in the ballpark. Yep. So when considering, hey, I'm buying a house for $800,000, I want to put down $160,000, and my closing costs are going to be, $30,000. So that gets you, the reality of what it's going to take to buy this house.
Right. And again, it's better to have too much than too little.
Yeah, great. All right, see you next time.
See you next time.